Today in the grain market, soybeans rebound. Export commitments are at 99% with still 5.5 months to go in the marketing year. I think futures today made a full recovery from yesterday's fall, and it's mostly because of the drop in the crude oil. Crude oil was able to come back a little bit today, but I think it just showed that there was a little bit of slippage in the market. But with today's full recovery, that means that there's no correction in this market. And it looks like maybe traders just looked at it as a buying opportunity. And every time we get a pullback in the market, that seems to be what's happening. So fundamentally, the market looks pretty strong. Now, we're just operating headline to headline every day, and it's until this USDA report comes out next week. Today just was a mirror image of yesterday's range, and it's important to note that as the U.S.-China talks go, it's something to be watching for any information, certainly over the weekend, that will affect where the market opens or how it trades, and even starting on Sunday night. Even the option implied volatility was down to about 20% for soybeans. That's as low as it's been in a little while, but trade volume in the out of the monies has been sharply higher. So that just tells you everybody's just managing the risk and adjusting the market and still expecting that there's going to be a lot more volatility ahead. So I think we're going to watch for that. Now, corn did bounce back as well. China buying another 27 million bushels. Really added to the goodwill, regardless of the fact that the China talks were a little bit of trading barbs. But just like beans, the corn market did recover very well. And as spring gets a little bit closer, I think that there's going to be many more market movers. Interest rates, inflation, energy prices, and weather is all going to take a precedent in the market. And those kind of headlines are really what's going to be driving our day-to-day movement. The option had a little bit of a slippage in the volatility, and a big active trade actually was the $6 calls. So I think it just goes to show that there's a lot more influence in some of these options trades, and I think it gives us an indication that perhaps the market wants to move to that level, or there's going to be expectation that the market's going to be doing that. Now, wheat did slip as well. I think the selling pressure just across all three exchanges is just an indication that there just isn't anything to hold this market higher. If you think that that maybe that they were going to be able to follow corn and soybeans, there's just other things in play. I think that they did make a new low, but there was some bottom picking kind of helping the market. So we did trade on both sides of unchanged today, even though we're closed a little bit lower. But there's better weather, and global competition is really keeping wheat down and keeping it unable to kind of like claw back from the slide that we've been experiencing really for the past number of weeks. And I think that, of course, that competition is going to cap any really significant opportunity for wheat to gain any ground like corn and beans did. Now, the U.S.-China talks should give us something to trade Sunday night, so that's going to be something to watch for over the weekend.